Hello, this is George Coyle from Triangulated, and this is Secular Trends. Sounds very serious, huh? Okay, so this week we're going to do what I do once a quarter, which is to basically review the earnings season that just ended through the secular trend lens. And as you probably know, I read lots of earnings transcripts because that's what I do for fun. And I identify trends, and so earnings season is really a glut of potentially new information or affirmation of what's come before. So with that, a lot hasn't really changed. The three main trends continue to be AI, data centers, and cloud computing. The enthusiasm there is pretty much as good or better than it has been for the past several years. So, at least from a fundamental standpoint, from the viewpoint of executives, those trends are going very strong. And earnings of the related companies are showing the same. Now the stock prices aren't, but that's an issue for another day. One thing that did pop up a little bit this quarter is agentic AI, which is getting a lot more attention. And to simplify it, this is the stuff that's going to put most of us out of work in theory. Agentic AI is basically capable of doing multi-step processes without much, if any, human oversight. So, with that, companies are actually starting to get pretty specific about their cost savings from AI. And it might come as a surprise, but AI really got popular about 3 years ago now. But there just hasn't been too much commentary, at least in earnings calls, about how much they were actually saving. And they're really starting to share the amounts that they're saving. So to me, I know that everybody thinks AI expectations are exaggerated, they're too high potentially. It's a played out trend, but when you look at what the executives are saying, it makes you wonder if maybe we just really are at the beginning because they're actually starting to implement it and see related cost savings. So time will tell, but that's what I'm seeing from the earnings transcripts. Okay, next is humanoid robotics. It's still a thing. It's still pretty popular. Not quite as popular as it was a little less than a year ago, and maybe that's why those stocks aren't moving like they did last year. But still popular. Still one of the ones that is newer and that people think is going to become a big thing. Okay, next we got private equity and private credit. They're also still getting mentioned, but there's a lot of negative news from the mainstream media about Blue Owl, lockups of capital, the PE stocks, the stock prices of PE companies are down a bunch over the past year or so. And so I think that all of these happenings are really dampening the enthusiasm for private equity or private credit. The executives that work for these companies still think it's a thing and it's growing, but boy, it's the amount of commentary has just slowed down a bit, and it's hard not to notice that's happening at the same time that all this bad stuff is hitting the mainstream media. So to recap, AI data centers and cloud are going strong. Agentic AI is basically starting to pick up steam. Humanoid robotics remains a thing, not quite as popular as last year, but it's still a big hopeful trend. And private equity and private credit are not getting quite the commentary, probably because of all the negative news. So that's really it for this week. If you'd like to stay on top of everything, including finding beneficiary stocks and baskets related to these trends, sign up for the paid research. It's about $300 a year, and there is a link below. So that's it, and I'll talk to you next week. Thanks for listening.